Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, gold after making a high of 1993, we can see that finally gold closed at 1980. And if you look at the news, you can see gold closes lower as the dollar weakens as investors see little chance of further US interest rate hikes. Dollar post steep weekly fall, trades below 150, and it is talking about USD JPY. So overall, we can see the market has almost digested the fact that the chance of interest rate hikes are very less right now, as a result of which we can see immense pressure on the chart of US dollar or DXY. So at first, let's have a look at the chart of DXY, because as a forex trader, it is very important to know what is going on the US dollar. After all, US dollar is the most traded currency in the world. So DXY closed at 103.61, and we can see the trend reversal here, because market was forming higher highs, higher lows, and here we can see the trend of the market is reversed, and right now we can see the market is forming lower lows, and when market is going up, market is also forming lower highs. So in the coming days, if the same market sentiment remains, then we can expect further downside on the chart of DXY, and the market will continue to fall in this pattern. Okay, and during the weekend, if any news comes out as a savior, then things will react differently. But as of now, in this situation, we can expect that there will be further downside on the chart of DXY, and the next support on the chart of DXY is around 102.50. But in this case, support doesn't matter. After a bounce from around 102.5060, again market will break the support and move downward. And I'm very happy that you guys are in love with FastBull.com website and their mobile application. Those who don't know FastBull is a blessing for traders like us for financial updates and fundamental analysis. Today I will show you how to use their analysis. Here you can see that they have two columns. First, from the institutions. So if you click on from institutions, you will see analysis of various reputed big financial institutions and their viewpoint on the market. You can see that the list is never ending. So if you want to take your knowledge from here to here, then this section of FastBull is very useful. And if you want to listen to the analysis of the in-house analyst of FastBull, then simply click on views from analysts, and you can see sell WTI, sell USD JPY, trading, and and the best part is that it also shows how many pips profit and loss is going on. So do check out FastBull. The link is in the description or the comment section. Okay, now let's have a look at the chart of gold. So at first, let's look at a weekly chart here. And if you look at a weekly chart of gold, we can see this week market has formed a big green candle. Let me remove the drawings here. Market has formed a big green candle here. And if we just observe the plain chart here, we can see the market is getting bullish again. And if we look at the chart, then we can see that overall we have an ascending triangle pattern, and ascending triangle pattern is a bullish pattern. So as if we go by the technicals, then obviously a breakout should come. Market should break 2080 and move higher, but personally I don't think so market have the strength and potential to break 2080. To be honest, I don't think so the market will be breaking 2000 level also, because for a breakout or breakdown, we need a fundamental factor. We need the backing of a news, and right now we don't have it. Okay, maybe we'll get to see some upside, some temporary upside in the coming days, but I don't think so. In spite of having an ascending triangle pattern on the higher time frame, market will not be breaking. And now we are back to our beloved hourly time frame. So if you're a day trader, if you're a scalper, doesn't matter. Okay, 1 hour time frame plays a very important role because this time frame is not very fast, this time frame is not very slow like 4 hours or daily time frame. Okay, it falls in between. Personally, I like trading on the 1 hour time frame. Anyways, we had a downtrend couple of days ago. Market was in downtrend and the structure of the market was bearish, but we can see the structure of the market has changed right now. We can see in this particular portion of the market around 1940, 1950, the structure of gold changed completely. And if we observe the present trend of the market here, there is no doubt that we have a bullish trend in the market. So if you're a positional trader or if you're a swing trader, then you should respect the overall trend of the market and you should go for a buy at support. What? You should go for buy at support, considering the present trend of the market, because the present trend of the market is bullish. Okay, so if market comes down to support and bounces, you can look for a buy position. And if you're a day trader, then also you should be looking for buy positions just to be on a safer side, because in this type of market condition, number of buyers are higher. So as a result, if you take a buy position, your accuracy increases. So let's understand the levels one by one. First of all, we can clearly see the market is respecting our FIBO beautifully. So let the market open. Okay, let the market open. If you already have taken a buy position, for example, you have taken a buy at 1979, 1981, 82, then be on the trade, because market, we can clearly see the market is respecting FIBO setup here. So right after the market opening, if market acts like a typical Monday market, then we can expect some upside here. And if you're trapped right now, then yes, I think market will give you the opportunity to exit also. Okay, and on the other hand, during the day, if we see market going down, do not expect a complete trend reversal, because for a trend reversal, what do we need? We need a backing of a fundamental factor, and we don't have that. So our first support will be around 1970 to 1968. Why? Because we have FIBO 38.2% retracement level. Along with that, we can see the market has also previous resistance around the area. So previous resistance will be working as support, and yes, we can expect that some sort of buying will come around this area. So if market comes to 1970-68 level and market bounces, we can hit the buy button. The second support on the chart of gold is around 1962 to 1963 because of FIBO 50% retracement level, and we can also see previous price ejection around the area. And the third support is around 1956. Oh, sorry, 1957. Okay, 1957 to 1955, and this is the third support. And why? Because of previous support around this area and FIBO 61.8% retracement level. And in this type of market condition, we can expect that market will be respecting these levels. Once market will hit the level, simply switch to a lower time frame to observe the market behavior. Once you'll see the market is respecting the level, you can go for a buy button. Click on the buy button, and how much you can expect? Okay, at first look for 40 pips. Okay, once market will hit 40-50 pips, just observe the market behavior. If you see the market is still going up after 40-50 pips, then you can continue the trade. But if you see the market is losing momentum after 40 pips, you can book 50% profit or you can exit completely. But in these three levels, we can definitely expect that we will get a good bounce, we will get to make good money. And on Monday, if you see market going up, then observe the volatility of the market. And as we all know that during the first half of Monday, market usually remains slow. And if market remains slow and market hits 1993 level or 1992, okay, 1992, 1993 level, observe the market. And if market is slow, then obviously there will not be much volume. Without volume, market cannot go for a breakout. Okay, try to understand the points here. So if market reverses from here, you can also expect a selling opportunity around 1992, 1993 here. And to be honest, I think that after going up for a while, market will remain sideways, because for a trend continuation and to go for a breakout above 2050, 2080, market needs huge amount of strength, and market needs a big reason, and market doesn't have that. Okay. So let me wrap it up. So our market wasn't downtrend, but we have a trend reversal thing of a thing going on right now on the chart of gold. So as a result, respecting the present trend of the market, we should be looking for buy at support only. If you already have taken a buy position or you are trapped in a buy position, you can expect upside, because we can see market just closed at the FIBO 23.6% retracement level, and market is respecting the FIBO levels. On the other hand, if market um, drops after the market opening, then we can expect for buy, or we can expect a good bounce around 1970, 68, 63, 62, or 57, 55, the three levels that I mentioned. You can also see in between these levels we also have the moving averages. Observe the market around the moving averages as well. Okay, so these are the three levels where we can expect a buy. But right now we can see the market is nearing a very crucial level of 2000, and if you look at the contracts, then we can see still we have a good number of contracts standing at 2000 level. See, this is a 2000 call. You can see still a good number of contracts at 2000 level. So I don't think so market will be breaking 2000 level that easily. It will be a tough job for the gold. Okay, so observe the market around 1993, the previous high made by the market. In absence of volume, market should not break the level. So once market will hit 1992, 1993 level, observe the market behavior. If you see that market is forming small candles, then there's a high chance that market will reverse and we can go for a sell. And on the other hand, if you see the market is standing at resistance with a big green candle, use your common sense. Okay, but high chance that market will be struggling around the previous high here. If market reverses from here, we can look for a sell position as well, because if market crosses 1993 level, market will be heading towards 2000 level. Okay, and I don't think so market have the um, required factors to break 2000 level as of now. So the 2000 level, yes, 2000 is obviously the level already we have discussed in our previous videos. 2000, 2004 is a resistance. Then we also have resistance around 2010, but I don't think so we need to discuss right now. So let's wait and watch how the market opens on Monday. Okay, that's all from my side, my dear friends. Bye bye, take care and be careful. This is my analysis. Do your own analysis, because if you want to become independent, then yes, you should have your own point of view and trading style. Bye bye, take care, see ya on Monday.